Hey, look, I need you to be completely honest with yourself for a second. That little surge of dopamine you felt when you saw BNB crack $1,160, that relief, that excitement, that feeling of being a genius, that exact feeling is what's going to wipe out your portfolio if you're not prepared for what comes next. The market isn't rewarding you, it's testing you. And most of you are about to fail spectacularly because you're reading the charts all wrong. This isn't just another price pump. This is a precision-engineered trap, a carefully laid snare for the unprepared, and if you don't understand the 5 critical levels I'm about to expose, you might as well kiss your investment goodbye right now. So, do me a favor, smash that like button right now and subscribe, because what I'm about to lay out isn't just analysis, it's a survival guide. We are about to dive deep into the real mechanics behind this move, and I can promise you, it has nothing to do with the cheerful headlines you're reading on the news sites. They're telling you a story of growth and recovery, but the data, the raw, on-chain data, tells a completely different and frankly, terrifying story. This 4% pump is a classic example of a bull trap, a deceptive move designed to lure in greedy, uninformed retail investors just before a significant drop. The entire move is being fueled by a combination of leveraged future speculation and a temporary lull in selling pressure from large holders, not by any genuine, organic growth in the underlying value or utility of the Binance coin. Think about it for a second. What has fundamentally changed about BNB in the last 24 hours? Has there been a monumental announcement from the Binance team? A massive, ecosystem-shifting burn? A revolutionary new project launching on the BNB chain that justifies this sudden surge in valuation? The answer, and you know this deep down, is a resounding no. The silence is deafening. This is a technical bounce, pure and simple, occurring within a much larger and more dangerous macroeconomic context that is actively working against the entire crypto space. The global liquidity taps are tightening, not opening, and risk on assets like crypto are the first to feel the squeeze when capital becomes expensive. So, while you're celebrating a minor green candle, the smart money is already positioning itself for the next leg down, using this temporary liquidity to offload their bags onto desperate buyers who think they're getting in at the bottom. The volume on this pump is anemic. It's not supported by a massive influx of new capital, and the order books on major exchanges are showing a massive wall of sell orders, just waiting to be filled a few percentage points above our current price. They are letting the price run up just enough to trigger your FOMO, to make you believe the bottom is in, and the rally is real, so that you pour your hard-earned money in right before they pull the rug out from under you. This is the oldest trick in the book, and it works every single time because human psychology, the greed and fear that governs every single one of us, never changes. The charts are a reflection of mass psychology, and right now, the chart is screaming that the crowd is leaning heavily towards greed, and that is the most reliable contrarian indicator we have. When everyone is bullish, when the sentiment is overwhelmingly positive after a small bounce, that is precisely the time to be the most cautious, the most skeptical, and the most prepared to exit your positions. This brings us to the first of our 5 make or break levels, the foundational support that, if it breaks, will signal a catastrophic failure and open the floodgates to a price discovery phase to the downside that no BNB holder ever wants to see. This level is 980 USDT. I know, that seems like a long way down from where we are now, and your mind is immediately rejecting the possibility, but that's exactly why this level is so critical. The market moves to inflict the maximum amount of pain on the maximum number of participants, and a drop to that level would liquidate nearly every long position opened in the last 6 months and wipe out every single person who bought the dip on the way down, thinking they were being smart. The 980 level is not just a random number, it's the final bastion of hope, the last line of defense established during the capitulation event we saw back in the summer of 2024. It's the weekly support level that has held through multiple tests, and it represents the absolute minimum price that the most hardened, diamond-handed believers are willing to accept. If that level gives way, there is literally no significant historical support beneath it, until you get to a price zone around $450, a level that would represent a total systemic collapse of the BNB ecosystem. The very fact that we are having this conversation, that we are even considering the possibility of a retest of 980, should tell you how precarious our current position truly is. We are not in a healthy uptrend. We are in a precarious consolidation within a brutal bear market, and this 4% pump is nothing more than a dead cat bounce, a temporary respite before the next wave of selling pressure arrives. The data from intelligence platforms shows a frightening divergence. While the price is going up, the network growth on BNB chain is stagnating, and the number of active, unique addresses interacting with smart contracts has been in a steady, consistent decline for months. This is the definition of a red flag. You cannot have a sustainably appreciating asset if the fundamental utility of its underlying network is eroding. It's like a company whose stock price is going up while its sales and customer base are shrinking. It's a house of cards built on speculation, and it's only a matter of time before a strong wind blows it all over. That wind is coming, and the first sign that the storm is here will be a decisive, high-volume weekly close below that 980 USDT level. So let's say the unthinkable happens, and we witness a weekly close below 980 USDT. The emotional capitulation in the market will be palpable. Your social media feeds will be filled with panic stories of life-altering losses and declarations that BNB is dead forever. This is the moment where most investors make their fatal mistake. They either sell at the absolute bottom out of sheer terror, or they blindly double down, throwing good money after bad without a concrete plan, praying for a miracle that never comes. Your entire strategy in that moment of chaos must be dictated by the second make or break level, which is not a support but a resistance. This is the 1,150 USDT level, the very same level we are flirting with right now. In a bear market, old support becomes new resistance, and if we break down below 980, the 115 level transforms from a hopeful benchmark into an impenetrable ceiling, a price magnet that will suck the life out of any subsequent relief rally. This is the level that will separate the strategic survivors from the emotional bag holders. After a breakdown, the market almost always experiences a retest, a final kiss goodbye to the broken support level, now acting as resistance. It's a cruel psychological trick designed to give false hope, to make you believe that the breakdown was a fake out and that a true recovery is underway. You'll see the price climb back from the depths, maybe even rally 10 or 15%, and you'll feel that surge of hope again, convincing yourself that you were right to hold, that the worst is over. But it's a lie. That rally will be shallow, it will be on weak volume, and it will be met with an overwhelming wave of selling from the very same institutions and whales who sold to you at the top, who are now using this bounce to short the asset or to liquidate the remainder of their holdings. The 1,150 level will act as a confirmation of the new bearish reality. If the price struggles to reclaim it and gets rejected decisively, that is your final, unambiguous exit signal. It is the market screaming at you to get out, to preserve whatever capital you have left, because the next leg down is imminent, and it will be even more violent than the first. Holding through a confirmed resistance rejection is financial suicide. It's like refusing to leave a burning building because you're hoping the fire will magically put itself out. Now, let's talk about the third level, because this is where the narrative gets truly divisive, and where your ability to think independently will determine your financial future. This level is 740 USDT. I can feel the skepticism through the screen. 740? That's impossible. The chain is too established. The ecosystem is too large. It can't fall that far. This is what everyone said about Luna, about FTX token, about every single major crypto asset that eventually collapsed. There is no such thing as too big to fail in the volatile, unregulated, and highly speculative world of cryptocurrency. The 740 level is not a random number. It's a calculated target based on the logarithmic regression of the entire price history of BNB, and it represents a total wipeout of the gains from the entire 2023-2024 cycle. It's the price point where the final true believers, the so-called Maxis, finally break. It's where the psychological devastation is so complete that even the most ardent supporters capitulate and sell, not because they want to, but because they have to, due to margin calls, financial obligations, or simply the unbearable psychological weight of watching their net worth evaporate. This is the level of maximum financial pain, and the market always seeks it out. To understand why this is a plausible, even probable scenario, you need to look beyond the price chart and into the heart of the BNB ecosystem itself. The health of BNB is intrinsically, irrevocably tied to the fortunes of the Binance exchange. Any regulatory pressure, any lawsuit, any significant black swan event that impacts Binance's trading volume, its ability to operate in key jurisdictions, or public trust in the platform will have an immediate and catastrophic effect on the price of BNB. It is a symbiotic relationship, but one where the token has far more downside exposure than the exchange itself. If Binance sneezes, BNB catches a deadly cold. Our proprietary data, which aggregates exchange flow, futures open interest, and social media sentiment, is already flashing warning signs. The net flow of BNB onto exchanges has been subtly positive over the last week, even during this pump, indicating that holders are using this strength not to accumulate, but to position for a potential sell-off. The funding rates in the perpetual swaps market are becoming excessively positive, meaning longs are paying shorts to keep their positions open, which is a classic sign of an overheated and over-leveraged market ripe for a long squeeze. All it takes is one piece of bad news, one unexpected regulatory headline, or one large whale deciding to exit their position, and this house of cards comes tumbling down. The path of least resistance, when you clear away all the hopium and the emotional bias, is down. The 4% pump is a distraction, a magician's trick designed to direct your attention away from the weakening fundamentals and the massive structural risks that are building beneath the surface. Your job as a savvy investor is not to fall for the trick, but to understand the mechanics of the illusion. Your job is to have a plan for when, not if, these key levels come into play. Because right now, your BNB bag isn't an investment, it's a hostage situation, and the market is the one holding the gun. The only way to disarm it is to know exactly which wires to cut, and that means understanding our 4th and 5th levels, which will paint the complete picture of either catastrophic failure or miraculous survival. Now we arrive at the turning point, the levels that will define the future of BNB for the next 3 years, and this is where you need to forget everything you think you know about being a diamond-handed investor and start thinking like a cold, calculated mercenary. The 4th make or break level is 1,340 USDT, and this is your single most important signal for bullish validation, the level that would force me to completely reconsider my entire bearish thesis. A sustained, high-volume weekly close above 1,340 isn't just another breakout, it's a declaration of war on the bear market. It would represent a clear and decisive break above the multi-month descending trend line that has capped every single significant rally since the all-time high, and it would effectively invalidate the lower highs pattern that has been the technical cornerstone of this entire downtrend. This would be more than a pump. It would be a structural shift in market sentiment, likely catalyzed by a fundamental change in the BNB ecosystem that we aren't currently anticipating. Perhaps it would be a surprise, massively accelerated token burn that shocks the supply dynamics, or a landmark regulatory victory for Binance that opens up entire new continents of users, or a groundbreaking new project launching on BNB chain that finally delivers the real-world utility and user adoption that has been so desperately lacking. A move to this level would signal that the smart money is not distributing their bags, but is instead accumulating, and that the institutional flow is turning positive, betting on a new cycle of growth. But, and this is the most critical part, you cannot front-run this move. You cannot buy here at 160 and simply hope it gets there. That is not investing, that is gambling with the odds stacked heavily against you. You must wait for the confirmation. The market must prove its strength to you. You need to see the volume, the conviction, and most importantly, a successful retest of that 1,340 level as new support. Without that confirmation, any move towards it is just noise. Another bull trap in a larger bear market designed to lure in one more wave of buyers before the next collapse. Your trading discipline in this scenario is everything. The emotional urge to FOMO in as the price rockets upwards will be overwhelming, but you must be patient and wait for the market to prove that this time is different, because 90% of the time, it isn't. 90% of the time, these rallies fail at resistance, and the people who bought the top are left holding the bag for years. Now, let's talk about the 5th and final level, the grand prize, the 2,000 USDT target that seems like a fantasy from our current vantage point. This is not a short-term target, this is a cyclical target, and for it to even become a remote possibility, we would need to see a perfect alignment of macroeconomic stars and a fundamental renaissance for the entire Binance ecosystem. First, the Federal Reserve would need to pivot decisively towards quantitative easing and rate cuts, flooding the global economy with cheap liquidity once again, creating a rising tide that lifts all risk assets, including crypto. Second, we would need to see a massive resurgence in developer activity and user adoption on BNB chain that goes far beyond simple speculative DeFi protocols and into genuine, disruptive dApps that capture the public's imagination. And third, and most importantly, Binance itself would need to not only survive its current regulatory gauntlet, but emerge from it stronger, with a cleaner bill of health and a more transparent operation that attracts rather than repels institutional capital. A move to $2,000 would mean BNB is not just recovering, it's fundamentally revalued by the market, seen as a more robust, more decentralized, and more utility-driven entity than it was at its previous peak. It would represent a complete victory over the bearish forces and a validation of the entire exchange coin model for the long term. But let me be brutally clear, the path to $2,000 is a path that goes straight through the heart of our first three levels. It requires holding 980 as unbreakable support. It requires reclaiming 150 and turning it back into steadfast support. And it requires a powerful, fundamental reason to exist that simply does not exist today. The probability of this happening in the current environment is, by any objective measure, extremely low. The current pump is not the start of that journey, it is a distraction from it. So, where does this leave you, the BNB holder, right now, today? It leaves you with a clear, binary decision tree based on cold, hard evidence and not an ounce of hope. Your plan must be ruthless in its simplicity. If price loses 980 USDT on a weekly closing basis, your bias must be overwhelmingly bearish, with any bounce towards 150 seen as a gift, an opportunity to exit your positions and move to cash or stablecoins to preserve your capital. You must be willing to sell into strength to save yourself from catastrophic loss. Conversely, if the market somehow proves its strength and achieves a weekly close above 1340, then and only then should you begin to cautiously re-enter, buying on a successful retest of that level as new support, with a long-term view towards the $2,000 target. But until that happens, until the market gives you that unambiguous signal, the only rational data-driven position is to be neutral to bearish. This 4% pump is smoke and mirrors. It's the siren song luring your ship onto the rocks. The real story is playing out in the quiet, on-chain data, in the futures market leverage, and in the deteriorating macroeconomic backdrop. Your BNB bag is not a treasure chest. Right now, it's a liability, a time bomb ticking down to a moment of reckoning at one of these 5 critical levels. The question is, will you be the one holding it when the clock hits 0, or will you be the one who disarmed it with knowledge and discipline, watching safely from the sidelines with your capital intact, ready to deploy when the true opportunity finally arrives? The choice, as it always has been, is completely yours. So now you have the map, the 5 critical levels that will determine whether your investment becomes a ghost story you tell about the one that got away, or the foundation of generational wealth. But a map is useless without a compass, and in this volatile market, your compass is your own psychology, your ability to silence the deafening noise of the crowd and execute the plan we've just laid out with robotic discipline. Let's be brutally honest, the single greatest threat to your portfolio right now isn't a whale selling, it isn't a negative regulatory announcement, it isn't even a broader market crash. The single greatest threat is you. It's the part of your brain that screams to sell everything when the price crashes through 980 on a wave of panic, crystallizing a massive loss right before a potential snap-back rally. It's the part of your brain that whispers to you to throw your life savings into a leveraged long position when the price is ripping past 1340, FOMO-ing in at the very top of a fake-out breakout. The market's primary function is to transfer wealth from the emotionally undisciplined to the emotionally resilient, and this entire setup with BNB is a perfect trap designed to exploit every single one of your cognitive biases. The confirmation bias that has you scouring Twitter for any bullish tweet that aligns with your desire for the price to go up. The anchoring bias that makes you believe the price should be higher because you remember it trading at a much higher valuation last year. The recency bias that makes this 4% pump feel like the start of a new bull market, making you forget the 10 preceding weeks of relentless selling. This is the real battle, and it isn't fought on the trading charts, it's fought in the silent, solitary space between your ears. This is why you must take this map and codify it into an unbreakable set of rules. You must write them down. If price does X, I will do Y. There can be no ambiguity, no room for interpretation in the heat of the moment when your heart is pounding and your palms are sweaty. For example, your rule must be, I will sell 50% of my BNB position if we get a weekly candle close below 990 USDT, and I will place a hard stop loss on the remaining 50% at 960. It cannot be, I'll see how it looks if we break 980. That is a recipe for disaster. Similarly, your rule for the upside must be, I will not allocate a single additional dollar to BNB until we have a confirmed weekly close above 1,340 USDT, followed by a successful retest of that level as support on a subsequent pullback. Only then will I allocate a maximum of 5% of my portfolio to a new long position. It cannot be, this looks strong, I'll just buy a little here. That is how you get caught in the trap. This disciplined, almost boring approach is what separates the professionals from the amateurs. The professional doesn't care about being right on every trade, they care about being profitable over the long term, and that means rigorous risk management above all else. They are willing to miss the initial 10% of a move to ensure they are not caught in a 50% downdraft. They understand that capital preservation is the first, second, and third rule of successful investing. So, I want you to do something for yourself right now. Pause this video, open up a notes app on your phone or grab a piece of paper. Write down the 5 levels, 980, 1150, 740, 1340, and 2000. And next to each one, write down your exact, specific, unemotional action plan. What will you do precisely when price interacts with each of these zones? This single act, this 5-minute exercise, will do more to protect and grow your wealth than spending 100 more hours watching price chart analysis videos. You are moving from being a passive passenger to being the pilot in command of your financial future. You are taking control. The market will do what the market will do. It is an unpredictable, chaotic force of nature. You cannot control it, but you can control your reaction to it. You can control your risk. You can control your entry and your exit. You can control your emotions by having a plan so concrete that it eliminates the need for emotion altogether. This is the ultimate disarmament of the time bomb. It's not about predicting the future. It's about preparing for every possible version of the future. So, with your plan in hand, you can now watch the price action with a sense of detached clarity. If it drops, you are prepared. If it rallies, you are prepared. You are no longer a gambler hoping for a favorable outcome. You are a strategist executing a predefined mission. The fate of your BNB investment is no longer a source of anxiety. It is a variable in a larger equation of your overall wealth building strategy. This is the path to true financial freedom. It's not about finding the next 100x moonshot. It's about consistently making rational decisions that protect your downside while strategically exposing yourself to calculated upside. So take that step now. Write down your plan. Disarm the bomb. And when you've done that, I want you to come back to this video and in the comments below, simply write, plan in place. Let me know that you've moved from being part of the emotional herd to being a disciplined, independent thinker. And if this video has provided you with that crucial clarity, that framework for survival and success, then do me a favor, smash the like button, subscribe to the channel, and hit that notification bell, because we're just getting started in building the most resilient, profitable portfolio you've ever owned. The journey to true financial sovereignty begins with a single, disciplined decision. Make that decision today.